All right, today we're going to take a totally fresh look at one of the most pivotal moments in modern tech history, the dot-com crash. We all think we know the story, right? It's all about greed, total mania, and then a really painful crash back down to reality. But what if the big lessons we all supposedly learned from it were actually the wrong ones? Let's dig in.
So, I want to start this whole thing off with a question for you. What's an important truth that you believe, but very few people around you agree on? It's a really tough question, isn't it? Because it basically forces you to say something unpopular. But finding those unpopular truths, that's the key to seeing the world differently, and maybe, just maybe, seeing the future.
To get to these hidden truths, you first have to be able to spot the popular delusions. You know, the things that pretty much everyone believes without even thinking about it. Because if you can see through a belief that everyone else holds, you can discover what's really lying on the other side. The philosopher Nietzsche put it perfectly. He said that madness in individuals is pretty rare, but in groups, it's the rule, not the exception. And honestly, there is no better example of a collective belief that looks like total madness in hindsight than the dot-com bubble of the late 1990s. So let's go back and revisit that myth of the dot-com era. The story we all tell ourselves is one of just pure irrational mania, a time when all the old, boring rules of business were just, thrown right out the window.
I mean, just think about how wild these ideas sound today. The whole gospel of the new economy was that companies were supposed to lose money. Losses weren't losses, they were investments. Getting eyeballs on your website was way more important than, actual profits. And the best part? Just tacking a .com onto your company's name could literally double its value on the stock market. It was an absolutely insane time.
And this just shows you the frenzy. Look at Netscape. Its stock price just exploded within 5 months of going public. Then you had Yahoo and Amazon hitting the market with these massive valuations that seemed completely disconnected from reality. From the outside, it really did look like the market had just lost its mind.
This whole feeling was captured perfectly back in 1996 when the Fed chairman at the time, Alan Greenspan, famously warned of irrational exuberance. And get this, he said that more than 3 years before the bubble even popped. That just tells you how crazy things already were. But what if that irrationality wasn't the whole story?
Seriously, was it all just that irrational? Or was there something else going on that maybe we've all forgotten about? To really understand the dot-com boom, you have to pull the camera back and look at what was happening in the rest of the world at the same time.
So while Silicon Valley was having this massive party, the so-called old economy was basically in a state of turmoil. You had the East Asian financial crisis, Russia completely defaulted on its debt, a huge hedge fund in the US collapsed and needed a bailout, and the brand new euro currency was, well, it was tanking. The rest of the globe looked incredibly shaky.
So you've got to remember, the dot-com bubble didn't happen in a vacuum. It happened at a time when nothing else seemed to be working. The internet wasn't just another investment option. For a lot of people, it felt like the only path forward to a genuinely better, more prosperous future. So that exuberance, it wasn't just about greed, it was also about hope.
But then, the bubble burst. And the crash that came after was so traumatic, so painful, that it burned a set of lessons into the minds of every entrepreneur and investor for a generation. And those lessons might have been completely and totally wrong. I mean, the sheer scale of the collapse was just staggering. The Nasdaq peaked at over 5,000 in March of 2000. By October 2002, it had hit rock bottom at around 1,100. It was a total wipeout. And the conclusion everybody drew was that the crazy tech optimism of the 90s was a dangerous, foolish delusion. So out of that wreckage, a whole new conventional wisdom was born, and it was built on 4 main dogmas. First, play it safe. Only make small, incremental advances. Second, stay lean, which honestly was just code for being unplanned. Third, don't try to create brand new markets, just improve on what your competitors are already doing. And fourth, and this is a big one, believe that a great product just sells itself, so you shouldn't have to worry about sales.
But what if the exact opposite of all that is true? What if it's better to risk being bold than to waste your time on something trivial? That even a bad plan is way better than having no plan at all? That hyper-competitive markets are actually where profits go to die, and that sales and distribution are just as crucial as the product itself? The lessons we learned from the crash taught us to be timid, but real progress, that requires boldness.
This brings us to a really powerful new way of thinking about progress itself. It's this idea of going from 0 to 1.
Okay, so first, you have what's called horizontal progress. You can think of this as going from 1 to n. This is basically just copying things that already work.
So think of China taking technologies that were developed in the West and then applying them at a massive scale. The single word for all of that is globalization. But then you have vertical progress. This is the magic moment. This is going from 0 to 1. This is about doing something completely new, creating something that has never existed before. If you have a typewriter and you build the first word processor, you have gone from 0 to 1. The single word for that is technology.
And here is why this difference matters so much. A future that's only defined by globalization, just by spreading the old ways of doing things all around the world, is completely unsustainable. It leads to way more competition for the same resources and, ultimately, to environmental disaster. But a future defined by technology, by creating new and better ways of doing things, that can lead to a richer, more peaceful and sustainable world for every single one of us.
And this brings us all the way back to that question I asked at the beginning. Here's a candidate for a really important unpopular truth. Most people think the future will be defined by globalization, but the real truth is that technology, that 0 to 1 progress, matters way more. So, what if we've been looking at the dot-com bubble all wrong this whole time? Yes, of course, the peak in March 2000 was a moment of absolute insanity. But maybe, just maybe, it was also a moment of profound clarity. A moment when people correctly understood that we desperately needed bold new technology to build a better future. They were right about the destination, even if they were catastrophically wrong about the path to get there.
Which leaves us with one last question to really think about. How much of what you believe about business, about technology, about the future is really just an overreaction to a mistake that somebody else made in the past? Because sometimes the most contrarian thing you can do isn't to oppose the crowd, but simply to think for yourself.